This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
U.S. crude oil stockpiles last week fell to their lowest this year on strong export demand, while gasoline inventories rose much more than expected on weak demand, according to the Energy Information Administration on Wednesday. Crude inventories fell by 2.2 million barrels in the week to September 29 to 414.1 million barrels, their lowest since December 2022. Analysts polled by Reuters had expected a 400,000 barrel drop. Crude exports climbed 944,000 barrels per day to nearly 5 million barrels of oil per day, while net crude imports fell by 1.96 million barrels of oil per day, EIA said.
Oil prices inched up in early trade on Thursday, clawing back some of the previous session's big losses after an OPEC Plus panel maintained oil output cuts to keep supply tight amid concern about a looming slump in global economic growth. Brent crude oil futures were up 11 cents to $85.92 a barrel, while U.S. West Texas Intermediate crude, WTI, rose 7 cents to $84.29 at 0040 GMT. Oil prices settled down more than $5 on Wednesday as a bleaker macroeconomic outlook and fuel demand destruction came into focus, following a meeting of an OPEC Plus panel.
Moving on to the top news in the energy sector.
The Russian government is ready to ease a ban on diesel exports in coming days, the Daily Commerçant reported on Wednesday, citing unidentified sources. Separately, TASS news agency cited Energy Minister Nikolai Shulginov as saying that the government, at all levels, had been discussing partial permission for fuel exports. He said further decisions on fuel market regulation would be published in the near future. Despite being one of the world's top oil producers, Russia has suffered shortages of gasoline and diesel in recent months as high export prices made it advantageous for refiners to sell their products abroad.
Europe could wean itself off fossil fuels and create a self-sustainable energy sector by spending around €2 trillion, $2.1 trillion, on solar, wind and other regenerative sources by 2040, according to a new study. The report, led by the Potsdam Institute for Climate Impact Research, said the continent would require annual investments of €140 billion by 2030 and $100 billion a year in the decade thereafter to get there. While most of the sum would be needed for onshore wind expansion, solar, hydrogen and geothermal resources would be additional pillars of a strategy that would enable Europe's electricity needs to be powered exclusively from renewables by 2030. Next, we have the top news in metal markets. The global copper market is expected to see a deficit of 27,000 metric tons this year and a surplus of 467,000 tons in 2024, the International Copper Study Group, ICSG, said on Wednesday. World refined copper usage is expected to increase by about 2% in 2023 and 2.7% in 2024, the ICSG said in a statement. Although the global economic outlook is challenging, an expected improvement in manufacturing activity, the ongoing energy transition and the development of new semis production capacity in various countries should support higher growth in world refined usage in 2024, the group said.
Gold was steady on Thursday, but could end an 8-session losing streak, last seen in 2016, as U.S. bond yields and the dollar retreated from recent highs ahead of a keenly awaited non-farm payrolls report this week. Spot gold was steady at $1,821.64 per ounce by 0733 GMT. U.S. gold futures gained 0.1% to $1,835.80. While there is an attempt for gold prices to stabilize into today's session, there is not much conviction of a reversal just yet, IG market strategist Yeep Jun Rong said.
We will now look at the top news in the agricultural sector.
Chicago corn lost more ground on Thursday, while soybeans eased as prices of both crops came under pressure from advancing U.S. harvest and ample global supplies. Meanwhile, wheat futures rose, recouping last session's losses on concerns over production in Argentina. The most active corn contract on the Chicago Board of Trade gave up 0.1% to $4.85 minus 3/4 a bushel as of 0220 GMT, and soybeans fell 0.1% to $12.71 minus 1/2 a bushel. Wheat climbed 0.9% to $5.64 minus 3/4 a bushel. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.